Guys, good evening, everyone. Welcome to today's live stream. So today is actually a good day. Yeah, week is ending today, right? Tomorrow. So after touching few of what we are going to touch today, then by Saturday or Sunday, as we normally do, we forecast for the new week. So this is our forecast for last week. The forecast we did last week, right? Those of you that joined the live stream last week on Saturday while we forecast, know that this is the forecast when we marked out that price is coming to react from this demand all the way to that liquidity and to create a new high. Okay, so right now we are going to explain a little bit of my strategy, which is very, very simple. And before we now go to another pair, and we also dive down why price actually reacted here and why I forecast that price is going to react from this zone and get all the way to that extreme. All right. So let's go. Let's just get started, guys. So firstly, you have to understand market structure if you want to understand my strategy. I have vowed to keep everything very, very simple. Okay. And what does that look like? When we say market structure, I keep repeating it. Market structure is simply the movement of the market. All right. We have three types of market structure, but for me, we have two types of market structure. The third one can always be found when we already have either of the other two established. All right, what do I mean? When we talk about market structure, we have the bullish market. Okay, I won't be typing, so I will just use my arrow. We have the bullish market, which will be pointing up, and then we have the bearish market, all right, which is the downtrend. Okay, now the third one is the sideways market. All right, the sideways. Let me use these two to draw it. Oh, sorry, let me find a more stable tool. Okay, the third one is now the sideways. All right, the sideways. Okay, let me use my arrow. The third one is now the sideways when market is not trending up, not trending down. All right, so many people explaining market structure do say that we have three, but for me we have two, because this third one you cannot find it if the market is not already trending in either of the direction. What do I mean? Now during an uptrend, Now, during an uptrend, you might find something like this, all right? After getting a higher high, then we'll have a pullback. Before price will continue to print another higher high, we might see something like this. This now that sideways market, and then price will now continue. You might still see that sideways market above, and then price will now start reversing. So this is kind of what you see in the real chart, all right? This kind of what you see in the real charts is not always smooth as it is on the textbook version. And on a downtrend, when we have a lower low, all right, you see price pulling back to an extreme, which I will still come to, and then we will have a sideways market, all right, maybe a ranging market, then boom, a lower low, a new lower low. Are you guys following? So now, this is the main reason I say that we have two trends, okay, instead of three that everybody is preaching. We have two trends because one is being found when either of the two has already been established. All right, so let's get started. Now, let me put everything together. You all already know that in my strategy, I use market structure, liquidity, zone, which is a sideways market zone, and then I use Fibonacci as well. All right. Now, if we should mark out our uptrend this way, if we should mark out our uptrend, okay, after getting this break of structure, for those of you that have been joining this class, you should be familiar with this. After getting this break of structure, okay, what do we start expecting? We expect a pullback, all right? We expect a pullback. Once we have the pullback establishing, once we have this, what is this telling us? This is telling us that we have gotten our swing point A, which is at this level, because this is a bullish trend, right? We have gotten our swing point A, which is at this level, all right, and our swing point B, which is at this level. okay, and our swing point B, which is at this level. Now that we have gotten our swing point A and our swing point B, what does this mean, or what is this telling us? It's telling us that anything between this swing point A and swing point B, that we are still bullish no matter what price is doing. All right, because now how do I do? What do I normally do? What I normally do is I use these line tools, all right, to mark out my swing point A here, okay, and then still use the line tool to mark out my swing point B, so that I will know that anything inside these lines, for the fact that price is between this line, I'm still very much bullish. I should be looking to buy. All right, for the fact that price is between this line, I should be looking to buy. So right now, what do I do, or where do I buy from? That's where my Fibonacci tool comes in. Are you guys following? That's where my Fibonacci tool comes in. I will now use my Fibonacci tool to mark from swing point A, to draw from swing point A, all right, to my swing point B. Are you guys following? Now, once I draw from my swing point A to my swing point B, where do I now get my interest to buy? It will be the 62 and 70, anything below 50%, all right? Because you know that when we talk about Fibonacci, we talk about the equilibrium, we talk about the discount and premium level. So why do we use the Fibonacci? We use the Fibonacci in order to identify the equilibrium, the discount, and premium levels, all right? So now the discount is the level we want to buy, which is anything below 50%. So here is the discount, okay? This is the discount level, and up here is the premium level. So when price is on the premium level, we want to sell, and when price is on the discount level, we want to buy. Are you guys following? So does this mean that once we start having a pullback, we should always wait for price to come into our discount before we buy? Or can we sell? And the answer is yes, we can sell, all right? For the fact that price is still on our premium level, we can sell into the demand to buy from our discount level. But that sell is a low probability trade, if I must say, all right? Because price don't always get to a discount level before it start buying. That's where we now have an inefficient price action, okay? So sometimes you will sell from that premium when price is clearly bullish, you sell from the premium so that it will come to demand for you to buy. That's called a sell to buy trade. All right, for you to come to demand for you to buy, and then price will now ignore the demand and start buying. Okay, and start buying. So it's a low probability trade. The best option here, or the best option here, is for you to wait for price to come into that demand for you to now buy. So where is the demand, or where are we interested to buy from? You can see on my screen right now, we have the 62% and the 70%, all right, or the Fibonacci level below the 50% Fibonacci level. So I will mark these levels out to the down to my I'll mark the level out down to my swing point A. All right. So this my interested demand. Like this is the place. This is the level that I'm interested to buy from. Are you guys following? So what do I do now? Since price has established the pullback or correction, depending on the terms that you have heard from another video, since price has established the reversal, now what I will do is I'll wait for price to sell down, or sometimes I do sell, okay? But for the purpose of this class, I will wait for price to sell down into this my demand, and then I will look for another confirmation, because being it that price has come to this demand does not necessarily mean that price must buy from this demand. Are you following? So what do? We wait for price to give us a buying confirmation for us to buy from this demand. Are you guys following? Because sometimes you see price come to this demand, all right, then ignore the demand and then boom, switch back to downtrend. Are you guys following? So sometimes price from bullish to bearish, price switch from bullish to bearish. So that's why we do wait for confirmation on our demand levels. All right. So once price give us confirmation to buy from these demand levels, we have different types of confirmation. I will still touch that, but not actually today. I will not touch it today. I might touch one or two today, but I will not touch the rest. All right. So wait for price to give us a buying confirmation on this demand. Then we will now buy and target this our swing point B, simply we are targeting to create a new high. Are you guys following? It's as simple as this, all right? So you keep it simple and you make the most money out of the market. Don't start looking for new terms or going there to look for complicated stuffs. There is a book I read and it said that if you can't explain it, you don't understand it. Like if you can't simplify it, you don't understand it. All right. So you have to simplify it, break it down, remove some unnecessary terms. Okay. Make it as simple as even a 5-year-old baby can understand. That's when you actually understand what you're doing on that particular field. All right. So this is it for a demand level. Now let's touch the supply aspect of it before we go to a real chart example. Okay. So let me get rid of this. Now, on the supply side, on the supply part, we have a bearish trend, right? A bearish swing has established, okay, after getting a break of structure at this level. Are you getting me? After getting a break of structure at this level, all right? Now, once we have this break of structure, we already know, and not necessarily immediately we have the break of structure, okay? Once we have the break of structure, we wait for price to start establishing a bearish trend, a bullish, an immediate bullish trend, like a pullback, before we can now classify that, all right, we have getting our swing point A here, okay? Because this is bullish, our swing point A will not be at the top, and our swing point B here at the down at the bottom, right? Downside. Okay, now since we have gotten our swing point A and our swing point B, to make it very, very easy and simple for us, what do? We use the line tool, all right, the horizontal ray tool to mark out our swing point A to our swing point B, all right, so that we know that everything inside this line, everything between this line is still bearish. Are you guys following? For the fact that price is still inside this line, price is very much bearish, all right. Now, what do we do now? We use our Fibonacci tool to mark out from our swing point A. Remember, whenever you are using your Fibonacci tool, you are drawing from your swing point A. All right. Why are you drawing from your swing point A? If it is in the bullish market scenario, your swing point A is on the downside. All right. While your swing point B is on the upside. So, drawing from your swing point A on the bullish market scenario, you are drawing from the downside. But on the bearish market scenario, your swing point A is at the upside and your swing point B is at the downside. So now, for us to draw our Fibonacci level from our swing point A, we are going to draw it from the top, okay, from the upside, now down to the downside. Are you guys following? Now, why are we drawing our Fibonacci level? We are drawing the Fibonacci level to identify our equilibrium so that we know where we are expecting or where we are selling from. Okay, and once we mark out the equilibrium, this automatically divide the premium and discount level. Okay, so down here, as usual, we have the discount level, and up here we have the premium level. And since we are in the downtrend, we want to sell from the premium level down to the discount level. All right, but price is coming from the discount level and is stacking in. Okay, and price is coming from a discount level. Does this mean that we can buy since we are on the discount, since they say buy from the discount and sell from the premium? Yes, like I've explained on the bullish aspect, all right? We can buy, but know that it is a low probability trade because the general trend is bearish. Are you guys following? So now, buying from here, buying from here is a very low probability trade. So I would advise you have that patience to wait for price to get to your premium level so that you can sell. And selling from there has a higher probability because you know that this is a probability, a game of probability, all right? There is nothing 100% here. There is nothing certain here, okay? So for you to have a higher probability, you wait for price to come into your supply, which is that premium level, so that you can sell, okay? Now, the premium level is in the high, all right? Yeah, it's high. So what do? We mark out our supply level. Now, where will be our supply? For me, some people do mark from this 50%, everything here is their supply, all right? But for me, I do love to mark my supply from the 62% above. Are you guys following? Reason because this 50% is mostly liquidity. So I expect price to come more deeper. Are you guys following? Sometimes it happens that I do miss the trade, but whenever price come more deeper, it gives me more higher probability and it gives me more risk to reward. Okay. Now, once price come into this supply, all right, which is our premium level, we now wait for confirmation. Any type of confirmation, we have different types. Okay, you have so many types of confirmation. You can use candlestick confirmation. Using candlestick confirmation, your candlestick confirmation can be a candlestick engulfing candle, like a bearish engulfing candle. All right, you can use change of character as confirmation. You can go to 1 minute time frame, wait for a change of character on the trend, and use that as your confirmation for the fact that price is on the premium level. You can use two-leg protocol confirmation. All right, which one is two-leg protocol? When price uh, fail to create a new high and then went ahead to create a bearish, a swing, a lower low. All right, so there are so many types of confirmation that you can use on this particular aspect. So once you get to your premium level, you wait for confirmation and then you sell from your premium down to your swing point B, which is your discount, down to your discount, and you target your swing point B. All right. So your the projection will look something like this. Okay, then down to your swing point B. All right. So the projection will look something like this. Once you get your confirmation, your stop loss might be here, or price even come more deeper, your stop loss might be here. But what I do is basically a minimum of 1:3 risk to reward. I don't trade 1:2. All right. I don't trade 1:1 because I know that my strategy, I have about 40-50% win rate. Are you guys following? So if I'm winning a particular trade, I should win times three of any trade that I lose, so that when I match my risk to my return on investment, I'll be very, very profitable. I'll be on the profitable side. All right. Because if I should be doing 1:1 risk to reward, whenever I have a 40% win rate, you notice that that month I will not come out profitable. Okay, I won't be coming out profitable on that month because 1:1 risk to reward. That means if I should lose one trade, I'm losing 1%. If I should win one trade, I'm winning 1%. It doesn't make any sense. I see people doing it, all right, but it doesn't make any sense to me. So the minimum I go is 1:3. Are you guys following? So this is it for a bearish trend. I hope you guys understand. Now I want to go down to chart examples, okay? Then by the weekend, which is by Saturday or Sunday, I will announce that on the community. So if you're not on the community, do well to go to the Telegram right now, search of Larry Forex Trade, join the community, or click the link below this video to join the Telegram community so that you can be getting information on here is the community, all right? Larry Forex Trade. Here I drop every information, both my future live stream and both everything. Make sure you are in this community if you are on this live stream now. And if you haven't subscribed to this channel, make sure you hit that subscribe button. Are you guys following? Hit that subscribe button so you can be getting premium content like this and premium live streams like this. So let's continue, guys. Now let's go to chart example. All right. So I won't be using this for an example because this is actually our focus, our live focus for last week, and it's still on motion. So let me look for more chart example. Now, these are some trades that I took. Okay, these are some trades that I took. Um, I don't know. I don't know if this is more complicated or should I use it as an example, or let me just look for another example. Okay, let me just look for another example. Okay, we have touched all these ones. Let me go to another pair. Let me switch to Euro USD and see what we have there. Euro USD, let's see what we have here. This guy later bought without me. Euro USD later bought without me. So this is also our forecast for last week. My entry, most times I do get my entry on 1 minute time frame, 5 minutes time frame, 15 minutes time frame. That's where I do get my entry. But most of the times is 1 minute and 15 minutes. All right, sometimes I use 3 minutes, but mostly it's 1 minute and 5 minutes. So this Euro USD, we also forecast it last week. Although we did not take the trade because I couldn't get the confirmation I was looking for. Yeah, I got a confirmation, but it did not come to tag me in, and then it's going to our full take profit, which is this level here. All right, our full take profit, which is this level here. So for those of you that joined our live stream last week, you can see that our Euro USD is also playing out the way our GBP JPY is also playing out. All right. So had it been that we took this trade, we have capitalized on those two trades. All right, and is a very huge uh, return on investment. Okay. Now let's look for a chart example here. Let's look for a chart example. Now you can see this is a bearish example, all right? This is a bearish example, a bearish example. Let's go. Now we have our break of structure at this level, okay? After getting our break of structure, we mark from our swing point A. Now we have identified our swing point A, which is here, okay? So this is our swing point A, all right? And here is our swing point B. Are you guys following? Now we will mark from we will use our Fibonacci level, all right, to mark from our swing point A down to our swing point B, all right, and then mark our supply level from our 62% Fibonacci level to above, okay, 52% and above is our supply level. Okay, so here is our supply. Now, what are we looking for? We wait for price to get into our supply. You can see the way price come into our supply. All right. If we had entered this trade here, maybe with a confirmation on the lower time frame, which will give us, let me say, our stop loss might be here, and then we target our swing point B. Okay. You see the way price was dropping down to our swing point B, but later reversed against us to change character. All right. So this would have played out, but you see the way price rejected and then reversed. Okay. So this shows you that most of the times you get something like this. All right. It shows you that you get something like this some of the times, a losing trade. This would have been a break even, or if you do not go for a break even, you will lose the trade. All right. You will lose on this particular trade. So let's look for another example. Okay. Let's look for another example here. Let's look for another example here. Now we have our break of structure at this level. Let me see if this is a break of structure before that downside zone. Okay, we have our higher high here, lower high, higher low. Then we have our break of structure at this level. All right. So this is our break of structure, and we have established our swing point A at this level. Okay, our swing point A at this level, and our swing point B at this level. All right, so this is our swing point B. Now we will use our Fibonacci to map from our swing point A to our swing point B to see where price reacted from. So here is our swing point A and down to our swing point B. All right. Now you can see that price reacted on the 50%. So price did not get to our supply at this point. Okay. Price did not get to our supply, and I think that that's the main reason why this trade failed, because now we have an inefficient price action here. Okay, price did not get to our supply. It reacted at the 50% Fibonacci level and then started selling down. So when it came back, it still reacted, but there is an inefficient price action. You can see when price came back to that supply, it reacted. Are you guys following? You see clearly that when price came back to that supply after taking out the 50%, it reacted. It reacted down here. All right, but before then, we already switched bullish. So I expect price to take everything out. All right. So this is it. And just understand your premium and discount level, understand your market structure, how to identify your swing point A and your swing point B. After identifying your swing point A and your swing point B, understand your discount and premium level, and you are good to go. All right. It now left you to fight the psychological part of it, like the trading psychology part, okay, the mental part of it, and you are good to go. That's just the honest truth about this game. Okay. Now let me get rid of some drawings so that the chart won't be noisy. Are you guys following at all? Are you following at all? Am I communicating? WFX on the charts. Am I communicating? Now let's go to GBP USD for an example there. All right. I won't forecast any trade today. I won't forecast any trade, although I'm waiting for GBP USD at this supply. All right. I'm kind of waiting for GBP USD at this supply, but I will not touch it today. I will touch it by weekend, by Friday, sorry, by Saturday, Sunday. I will announce on the community. So make sure you click the link below this video to join the Telegram community. I will announce the live stream there before we proceed, so that I will touch the reason why I'm waiting for GBP USD at this supply. If I'm still going to sell from this supply, I will let you guys know on that particular live stream. If I'm going to start looking for a buy opportunity, I will let you guys know on that live stream. Okay. You said someone on the chat said, I don't really know the swing points. I normally draw from recent low and high. Yeah, recent low and high are kind of your swing points. Okay, that's your swing point. The low and high are your swing points. All right, but just know that we have external swing points and we have internal swing points. Are you guys following? So the external swing point can be from your higher time frame, while the internal swing point can be from your lower time frame. That's external structure and internal structure. So knowing the difference between your external structure and internal structure is your beginning of profitability on this game. All right. So this is a trade I took on GBP USD. Let me quickly touch it. And the reason I took this trade, though I did not take this trade on this time frame, it's kind of on the 30 minutes, a bit 15 minutes time frame. Let me check. Let me check. All right. So yeah, I took this trade. No, on the 5 minutes time frame, but it's kind of clear here. On the 5 minutes, yes. 5 minutes time frame, right? Because of these small drawings. But what's the reason behind this trade? The reason behind this trade is I have identified that price price is bullish. Okay, so I marked my swing point here. All right, so this is my swing point. Okay, sorry, this is my break of structure, I mean to say. All right, so this is the last break of structure, and after the break of structure, where am I now looking to buy from? I'll draw my swing points from my swing point A. I'll draw my Fibonacci. Sorry, I'll mark out my Fibonacci from my swing point A to my swing point B here. All right. You see that I have my 62%. You see how I clearly marked from my 62% to my 70%. Okay. But some of you will be like, but price did not get to my 52 to 70%. Why did I not buy? Why I bought was that you can see clearly that price has already taken out the liquidity on the equilibrium side. Okay. And whenever we have a liquidity sweep, what price do is price go to seek liquidity on the opposite direction. All right, on the opposite direction. And where is the liquidity sitting on the opposite direction? You can clearly see a triple top. For those of you that were in this class when I was touching liquidity, you can clearly see a triple top here. Price came here multiple times without breaking this level. All right, price came here multiple times without breaking this level. So I know that, okay, this is a sitting liquidity. If all the people that short this trade from here, all the traders that short this trade, all the traders that were resisting this trade from breaking out this level, all of them, their stop loss is clearly sitting at this level. Okay, their stop loss is clearly sitting at this level. And what does that tell you? That tells you that price will come up to seek that liquidity before any other thing. All right, price will come up to seek that liquidity before any other thing. So once price, now let me get rid of this so it will not be that noisy. Right? So once price grabbed the liquidity from that 50% equilibrium, I started looking for confirmation to take this trade. All right. So what confirmation did I get? On my lower time frame, I had a change of character. Okay, on my lower time frame, I have a change of character, so I took this trade. And I caught this trade live. I caught this trade live on my Telegram channel. All right, so click the link below to join the Telegram. Don't miss out on that Telegram. That place I drop premium informations. Okay, so now I have a change of character from my lower time frame. Okay, you might not see it on this time frame, and if I should go lower, I might not be able to locate it because of limited chart views. I am not using uh, a premium version of the trading view, so I have limited chart. So now I have a change of character, and once I got that change of character, I know that okay, price is ready to buy, but this buy is a temporal buy. All right, so I entered and I target that liquidity level. All right, I target that triple top here. I target that triple top and I exit. Now, those of us that bought here, where is our stop loss? Our stop loss is here. Okay, our stop loss is here. You can see where my own is. All of us, our stop loss is here. Some of them, their stop loss is below this line. All right. So this is another liquidity. Since price has taken out liquidity from here, what do you think that price will do? Common sense will tell you that price will come to take out this liquidity here before buying again. All right, because price cannot start selling deeply if price did not get to a potential supply, like a meaningful supply. So what did price do? Price came down, took all the liquidity at this level. All right, took every liquidity at this level. Okay, even those that set the 60% to 70% order, price also grab their liquidity at this level. Are you guys following? Are you seeing how this thing work? And after grabbing that liquidity, what happened? Price started buying immediately to the upside. Now, what's price doing? Price is coming up here to grab the liquidity at this level. And after grabbing the liquidity at this level, price is coming into my supply because immediate price takes out this liquidity, it's arriving into my supply, and I will start looking for sell opportunity. Are you guys following? So if you want to be trading with me live, join the Telegram channel. All right. Join the Telegram channel because I do call all these trade lives. I don't just call trade, I teach them. I tell you reasons why I'm entering this trade. And you can follow me on X as well, on Twitter at Larry Forex. Okay, Larry Forex underscore. That's actually a new account. Make sure you give me a follow there because I also break down all these trades there. So guys, I think we are going to call it a day today. This video is going to be live here on YouTube. You can always come back to rewatch and backtest as well. So that's all for today, guys. That's typically all for today. Let's call it a day and thank you all for joining. If you haven't subscribed, hit that subscribe button right now and don't miss our live stream this weekend on Saturday or Sunday. I will announce that on the community. Saturday, Sunday, we are coming live again on YouTube. So to focus for the new week, that's how we'll be doing it and that's how we'll be carrying it along. So that's it. That's all for today, guys. Thank you all for joining. See you guys on Saturday and see you guys on my community.